Hello, good evening everyone. We will start shortly. Just sending out some notifications. Hello. It's been a long time. I thought I needed a bit of a practice at this tonight. I'm sorry I haven't been live for such a long time. Hold on, I just need to... Okay, turn off my ears. Okay. Yeah, I completely lost my confidence along with a lot of other things, but hopefully I'm going to get it back, start again, start a new course, and there we go. So let's first of all, I can't remember what order I put stuff in, but I've put the wrong order. I'm going to have to edit the YouTube because actually tonight we are going to look at the 10-year yields. Then we're going to look at the S&P 500 and the FTSE and then dollar yen. And then we will look at some crypto. So let's start off with the 10-year yields. Now, this to me is a really, really interesting chart. It looks a lot like the euro dollar, and therefore it looks a lot like the inverse of the dollar. And if we go out all the way out to the monthly and we look at this big picture chart, this is why it looks like it, because we're stuck at one of those major 236 fib levels with and that comes in at 4%, 4.04. And that's where we've got knocked back, and we've got knocked back having done 5 waves up as well. So potentially that would be bearish, and we would expect it to come back to these lows around 2.6%. The problem is that so far this price action here has been really corrective, and sometimes, you know, you can count these waves and count them wrong. In other words, it's possible that this was wave 1, 2, 3, 4, this was our wave 5, and this was just a very shallow pullback. Or you know, you could just be one out on the count, or this could just be so this is 1, 2, 3, 4, and this is wave 1 of 5, 2 of 5, and so on. And here we know, so far though, this pattern is a bullish flag pattern. It's choppy, overlapping compared to this rapid movement higher. So for me, it's going to be all about this 4% and a monthly close above it and a hold above it. And if we continue lower in this descending channel, choppy overlapping, this is my big picture view, we could come back to 2.6. That's the kind of, oh, we get a recession now instead of recession later view. Short term though, in this descending channel, if we said that was our first swing lower and measure it, hold on, it's not quite working, here we go. So measure from this high to this low, project it from up here, we're sideways at this 61.8 level, and our equal measured move level is lower at 3.16. So this is one of those charts where I'm going to say I really think that we are going to continue sideways and it's going to be all about what the Fed do, which is not, of course, until next week. So if we break these highs, we've got one of those kind of bullish bottoming patterns, and I would look for a retest. It would count for me as a whole of this 236 fib, and I would look for a retest of 4 in these yields. If we continue lower, then 3.16 is going to be where it's kind of really important. If we take the most recent swing, rather than put huge fibs on, let's take the most recent swing that we're in, because quite often they're quite informative if the market is reacting to these levels, and it is. This 236 was support, then resistance, 50%, a big deal level. We found support, and then we've been washing back and forward through it. And so this lines up, with this 61.8 down here, and here's the 38.2. So, gun to my head, I don't know. This is, flat moving averages, all sideways, all at the same price. We can put our 20 and our 50 in. You can see here's our flat moving averages. My at a glance, holding underneath this daily 50 says lower, and that would mean Fed doing nothing, and the bank crisis scared them next week. But until then, or we could get there and then rally. Today though, we could look at it and say, oh well, we're underneath this daily 200 moving average again, but it's completely flat. And actually this 3.516 level is more important. This is this 61.8 level for me is more important as support and resistance. So no trend. My head says higher. If I didn't know what chart this was, I would say higher before lower in this choppy overlapping channel. Pretty key support here, short term. So let's go down to the short term trading just for this week. I would expect if we hold these lows that this is the first swing, and we do some more of this sideways price action before we decide. So first swing A, B, C, and then we continue lower. So 10-year yields really hard to read, just like the dollar. Everything, and just like the dollar, the euro dollar, everything is going sideways at really important levels. When I look at the dollar, my head says lower in this one as well, because as I said this morning, underneath this 101.99, I think we're set to retest the lows. And that would mean in the euro dollar, after bouncing off that really important resistance level, set to retest the highs in the euro dollar. What does this mean for dollar yen? Well, in dollar yen, hello Lashawns. Okay, dollar yen. For me, like first glance on this weekly, in fact, let's start with the monthly, because we'll do a really big picture view. Because on this monthly, you would normally say, well, wow, what a beautiful, lovely trend, and we've just retraced back to the monthly 20 moving average. Now, what's not to like about this? Well, what concerns me is it's the top of a sideways range. It's, if we measure from this low to high here in dollar yen, it was a textbook equal measured move. So for me, the key level in dollar yen is this 131.47. I know we've had a little dip underneath it and we're sideways underneath it, but if we continue underneath it, it confirms this bearish reversal at this equal measured move, and it really points us back to at least the middle of the range and lower from here. With an ABC, you would normally expect a kind of 786 retrace thing going on. I'm wondering if the market is looking at it this way. Just make sure I've got that level. Sorry, 130.77. So this is pretty key support. I think the first time we're bouncing off it, I think we've had quite a strong move down, and I'm watching this bounce. I'm expecting it on the weekly to be a 3-wave correction, and then I think, yes, dollar yen should go lower. All of these moves are choppy, overlapping. We're held underneath the daily 200 moving average. It doesn't mean we haven't stopped going up, but I think this rally in the dollar right now is corrective. So 2 levels I would be looking for. At the moment, I think we continue higher to 136.24 and maybe 140. 140 would be like one of my all-time favorite sell setups, because 50% equal measured move, you know, I love that as a short setup. But I think with this 200-day moving average here, that this is more likely. So we're going to find out. It's going to be all about the Bank of Japan, which is later this week. So the Bank of Japan is Friday the 28th, and monetary policy statement. At the moment, bear in mind, in Japan, you know, they've got inflation at 4 or 5%, and they've still got negative interest rates, minus 0.1%. And they've done massive quantitative easing. So yeah, let's see what they do. It is going to be all about the Bank of Japan on Friday, and that will be ahead of the Fed. Now, clearly, if they do anything to pause or I don't think they will do anything, and I think the market is expecting a little bit too much. So I think more likely. Have I got an echo or some feedback? Can anybody tell me? Okay. I hope not. If I have got echo or feedback, could you let me know? Thank you, Oxygen. Okay, so I'm expecting the Bank of Japan to disappoint, not hike, and a rally to 136 from here, maybe higher. But it's a correction. Bigger picture, I think eventually the yen will get stronger. Okay, the next chart we're going to look at. Hello, everyone. We're going to look at a couple of stock indexes, and then we'll move on to crypto. So my personal gut feeling in these stock indexes is we're going higher. I'm going to take everything off this chart here, clean up. Okay, if we just look at where we are sideways from this high to low, we're going sideways, stuck at this big 50% level. It is possible. There's a couple of ways to count this as a correction. So we have a 1, 2, 3, and then we've gone 1, 2, 3, and we're starting in a new upswing again. The alternative way to count this is that this is a kind of choppy, overlapping, leading diagonal wave 1, and we started a correction. An earnings season can sometimes do that. So this is our first swing, correction, and then we go up again. It's not quite clear to me yet. We need to kind of get a little few more days or another week out of the way to see which way. If we were to come back, I would be looking back to this daily 50 for support. And if I measure this high to this low, it would be all the way down to 39.70. But so far, you know, as long as earnings hold up and as long as the Fed don't do anything crazy next week, it feels to me more bullish. It feels to me like we're more likely to go up to this 4309 level. And if we go up here, the S&P's favorite fib is a 786 fib retrace. And hi, Ryan. I think it's more, no, I'm going to start doing it every day. I'm going to do one a day. I just, it's just taken so long. And yeah, don't be nice because I'll get all emotional. It's been a long road. Thanks. Okay, so holding above this 50% level at 41.55, which kind of looks like it wants to try and do doesn't it? Finally, like it looks like pulling back and finding support from it. We should push higher. In terms of this short-term swing here, I see this as a big 1, 2, and this whole sideways kind of thing as a wave 4. And we, you know, with earnings, you can get it. It can get very crazy. So as long as, you know, we don't break these lows here, I think this is still, you know, that wave 4 thing, or like really break down underneath their 236 fib. So I'm going to put this on low to high here. And so that's going to be like my trigger. I think a close underneath here at 41.14. That would, a daily close underneath there and underneath that 20 moving average, that would point to that bigger move and down to that weekly 50 moving average. So down to, yeah, basically 4,000 again. So as long as we stay above 41.14, 4114, we keep going up, and we are not likely to come back to that 4,000 level again. For now, anyway. I'm sure we'll visit it at some time in the future, but for now, we just keep pushing higher. So, you know, in the bad old days when in the bad old days of technical analysis, you would only look for lower if you took out the previous day's low. But this is just horrible chop. We've really been in horrible sideways chop basically since the start of April. And when it's sideways like this, it really does kind of point to that kind of wave 4 feeling. And fifth waves can extend a long way. We could easily, with a fifth wave, get up to this 45.28, but at least back to these previous highs and lows at 4309. So I'm not bearish yet, stocks, but I will be if we start to lose these lows, and you know, then I think we are still in the sideways consolidation and back to that daily 50. If we take a look at the FTSE, what a bullish chart this FTSE is. It's really on a mission to get back to these highs. And if we look at the if we look at what we've done in the FTSE since the start of April, unlike, of course, the S&P, you know, we're on a ripper of a trend higher, and you really don't want to count it out. So I would say bigger picture, we've 1 of 3, 2 of 3, 3 of 3. We're going to go sideways, and I don't see unless we, again, lose this sideways range we're in which case I would only be looking for, you know, 50% of this swing, maybe back to these daily moving averages. I think that this is sideways consolidation, and then we're set to retest the highs. There's absolutely, apart from being a little bit overbought, there's really kind of no reason to be selling this. This is super bullish on every time frame. Let's talk about where I think we're headed to. It's quite a common, so I think this is an ending diagonal, which is why it's so choppy and overlapping, and that's all the way from this low like this. This is the low back in 2003. Actually, this is the like .com era. So if this is our big wave 1 pullback, wave 2, then 1 and 5 normally have a relationship. This swing then and this swing. We've gone well beyond this 61.8, and so for on the upside I would be looking at this equal measured move level, and I'm just going to connect these. So I think that, yeah, the FTSE's got room to get up to 8355. Now it might not go there in a straight line, but that's where I would be definitely looking next as an upside target. So 83.55, and we're at 7,900 now. Well, the reason that the UK and Europe are outperforming is because our inflation is like insane. You know, we've got 10% inflation in the UK, 20% in food inflation, and in America it's only 5%. So everyone's betting that they're going to have to hike rates much more in the UK and Europe. And, you know, in currencies, all of the data that we look at, all of the economic data we look at, are so that we can determine what the central banks are going to do, because money always chases yield. Okay, no, money always chases yield. So if they have to raise rates in the UK to get ahead of inflation above 10%, they're going to buy UK bonds and UK stocks. And that's why. Now, quite often it's quite weird, because normally the UK would there's an inverse relationship between the pound and the FTSE. The pound has been really strong and the FTSE's going up as well. And that really is, I think, inflation. So, yeah, it won't end well, but for now it looks pretty good, doesn't it? Okay, let's go and talk about Bitcoin. See where we are doing. I'm going to look at the spot Bitcoin chart. Now, in spot Bitcoin, let's talk about why I think we've made an important bottom here. I'm going to go to regular candles and we're going to look at the monthly chart. So this is the all-time history chart. When we go and we look at, and I'm going to go into log scale. So when we go and we look at how long previous corrections, the big corrections, so this one here that we made in 2013, 2015, this correction, how long they lasted, because we often forget the time factor. We can see this was 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12, 13, 14, 15, 16 months, I think. We put it on here. This was around where we made 1 month out, but this is around where we made a bottom here as well. And then if we move this to this high, this was around where we made a bottom as well, December. So that means in terms of time, if not price, because it's not always price, but in terms of time, these last 3 corrections have been equal. And the market doesn't always repeat, but it does rhyme. And that timing thing is often one of them. It helped us with this bottom here for sure. So I do think we've made a major bottom. And whilst we might come back quite a long way, I don't see it taken out significantly for a while. Also, if we take a look at the big 5-wave up rally that we made from the 2019 low, this is a 786 reversal which is very common. But to confirm the bullish reversal, we need to get above this 61.8 level. 28,415, and the first time back, it's very often you don't do it, but a monthly close above 28,415 for me, that's our bullish reversal. And because we do those fib pattern rules and they work really well in crypto, on the upside we're going to be looking for 44,000, 43,900 basically, this 38.2. That's going to be our first target. So that's our main trade. From 28,400 to 44,000. Now, where do I think we could come back to here if we've completed 5 waves up? Well, normal Elliott wave rules would say back to the bottom of wave 4. That would put us potentially at least all the way down here, 21,500, maybe 20,000. Feels quite squeezy in Bitcoin because of everything that's going on, because there's so much money in there at the moment. So it may be that we just come back to these lows, trade sideways, the 200 moving average catches up, and 25 or 26,000 is all we get. Again, if we think we've completed 5 waves up and we're in that bigger 3-wave correction here, which doesn't kind of really fit with seasonality, then, but if we, this last year we went down the whole year, so what do I know? We're going to go fib level to fib level. So far, we seem to be getting a really good reaction at 27,300. That's what we tested this weekend. And for me, underneath that is pretty key. I'm going to look for this 38.2, which is at 25,000. And I'm going to look for 50% of this swing, which is also 25,000. So we can say if we close underneath this weekend's low, 25,000 basically is where we're going back to in Bitcoin. And you know, we've kind of got a difficult week to get through. Bitcoin really doesn't like Mercury retrograde. Bitcoin really doesn't like eclipses. We got one of those on the 6th of May. Seasonally, you know, if we look at what happened at previous ones, it wasn't very good. So there is the potential that we break down here. I also think that, you know, we might bounce and we might go sideways and make everyone's going to go, oh my god, head and shoulders pattern, which I hope not, because then it becomes one of those foregone conclusions. But that's okay, because if we did make a head and shoulders pattern here and we broke down, then the target would be that 50% level and 25,000 anyway. So we know if we break that neckline, we already know that that's going to be a target. So I wouldn't be surprised if we went sideways in this zone until the Fed's done, or the next, you know, Coinbase gets shut down, or, you know, Coinbase are making really good progress setting up outside the USA. I really do see any kind of regulatory stuff as temporary, whilst they, you know, there are other countries that really want, like Europe and the UK, want to be a crypto hub. So I think, you know, it's not going to kill Bitcoin, but it might just cause a bit of a bump. So there we are. That's April is usually up for Bitcoin, yes. But then last year, of course, it was down the whole year. So, and, you know, Bitcoin is very correlated with the NASDAQ. Let's pull up a NASDAQ. Let's find a seasonal chart for the NASDAQ 100. Equity clock has a good one. We've got to get through these earnings seasons. April is pretty good, but I wouldn't rule out a pullback in May. So Coinbase is shit, I know, but a lot of people use Coinbase. Okay, a lot of the liquidity, so a lot of the good things that have happened in crypto have happened because of big trading firms in the US mainly getting into the market. So many of them were enabled by those banks, Signature Bank and Silicon Valley Bank and so on. And they don't trust Binance. My old boss, hedge fund boss, nobody can get Binance through compliance. Nobody can get most of these exchanges through compliance. They really like those banks because they could buy and sell at a bank, safe as a bank. And now they can't do that. So Coinbase, because it was kind of moderately relegated, you know, you can get Coinbase through compliance. You could get Bitstamp through compliance, and so that's basically been the problem. Now, it will only be a matter of time before they set up everywhere else, but until then, that's where we're at. So those are the key levels I'm looking for. 27,300, a weekly close underneath. Binance is it buying void? That would be great news. It would be really good news. So 27,000 is key support. 25,000 would be a great level to try and buy. I wouldn't rule out though that it comes back to maybe 20,000. So we'll see. We'll see. So my personal bullish count here is this is 5 waves up, 3 waves back. This is wave 1 of 3. We'll do a wave 2, and so really we should be, you know, these fibs on this most recent swing and this 50% here makes it really likely, but it doesn't mean we can't go a little bit lower. So we've done 1, 2, 1 of 3, 2 of 3 that we're in, and then up. But because I think the NASDAQ is in a wave 4, there are some Elliott wave people who I trust who are looking to see maybe Bitcoin is still, you know, this is a big 1, 2, 3, a shorter 3, 4, and a 5th wave. There is, you know, there are alternate counts, but that's my primary view until the market does something to change that. Okay, let's take that's really kind of where Bitcoin is. And ETH is going to do what Bitcoin is doing. And as long as ETH is going to go up, a lot of people won't sell. Far too many people who staked ETH are offside. And they might start selling again when they get back on side. But ETH is, I think, going to just do what Bitcoin does. Okay, so let's take a look at a few others. So let's take a look at Arbitrum, which is one that we have been following. So on this weekly, or in fact, let's take a look on this daily chart. As I said this morning, each one of these fib levels in Arbitrum have been really important and respected, at least the first time we touched it. So if you look here on the 4 hour, each one of these levels, 236, 38.2, I'll make them darker so you can see them. We've bounced from them, and now here we are in no man's land underneath the 61.8, which is our resistance, with our support, our next good support, lower at 125. Not there yet. I also feel like this sideways is a wave 4 here. So we've gone 1. So I'd like to see this correction finish with 5 waves down. 1, 2, 3. We're in a 4, and we've still got one more push lower before Arbitrum. And this choppy overlapping sideways kind of confirms that. So no buy for me yet until we get to 1.253. And still think it's got lower. If we take and nothing that happened today has kind of changed my mind on that. In terms of this hourly correction that we're in here, I'm just looking to see if we go red here, we've finished. So look, this is one. Yeah, we're at that 61.8. Maybe we might squeak to 135. We might go to 130.750, and of course above 1.375. I'm going to say bullish, and this was just an overshoot. But for now, for me, yeah, if this goes red here, it's going to continue lower, and 1.2539. So, is it the best short setup out there? Probably not. Too much interest in it. Okay, let's take a look at RDNT. Yeah, this is a very nice. I wonder if this is the best history. I just want to make sure there isn't. Oh wait, sorry. Yeah, that's the best history. That's the best history. Okay, so I'm not bothered by this looking like a 3-wave correction, because very often in a new asset, that's what you get until it kind of finds its feet and gets going again. The problem is that when you get this 3-wave correction, the most common retrace is a 786, which would mean all the way back to 0.32. For now, though, we seem to be going level to level. It's very choppy, but look, first time, 236, we went all the way up and nearly retested these highs. This was messy. 38.2 was messy as well, but it held. 50% was messy, but it held. So now that we're underneath it, we're going to go down the staircase in this one. And we've got further to go, I'm afraid. And again, it looks like a declining wedge or channel. The good news is, look how this is a really strong 5 ways up. So we're looking at a 3-wave, this is trending higher, and this is choppy overlapping correction. So it's just how far is it going to go? Sometimes they terminate, you know, between the 50 and the 61.8, but the most common is down here. So I'm not going to rule it out. yeah, we're just going to go level to level. And as soon as you bounce one and you go above the next one, so for example, if we bounce here and we get back above this 50% level at 38.5, we're going up. But for now, we're going down. And it's not the greatest sell because as I said, it's choppy overlapping. And in corrections, you know, it's really hard to stay on for the ride. You get shaken out. So still lower to go for RDNT as well, I'm afraid, unless we close back above 0.3853. Okay, let's take a look at ADA and MATIC for a short setup. So ADA, let's tidy up. I'm a little bit concerned in ADA that if we look at this on the weekly, that this is just a bear flag, you know. Now, yeah, gosh, it would have been good to hold above those weekly moving averages. So I'm again a little bit concerned that this is a bear flag. If we take a look at this most recent swing lower and just apply some fib rules, if this is just a pullback. So this is a 61.8. If we look at these fibs have been perfectly respected, especially this 236 fib. So I'm going to say that this 61.8 and then this 38.2 on a close. So 0.375 becomes important support for ADA. Not quite there yet. That's also the weekly 20 moving average. Very bearish weekly reversal candle last week, wasn't it? So we're not quite at our ideal support yet. We're not quite at these previous lows. But I think when we get there, we'll have 5 ways down and I'll be looking for this to bounce. Because of this channel, and because we could come down lower and we could come down to the sort of daily 200 moving average, I'm going to say watch out how we bounce from here. If it's just a 3-wave correction and we get stuck at that 50%, we could see another swing lower. So, but support next, 0.375. And just like Radiant that we just looked at, or some of the others, this just looks like an ABC. We're underneath these 4-hour moving averages. So lower still to go, and see what happens at 0.375 then for ADA. MATIC. So yeah, MATIC and Ripple, those make me nervous because there's so much whale selling, and that does make me nervous. So let's take a look and see what's going on with MATIC. So this morning when we were looking at maybe holding that daily 200 moving average. If we look at this on the weekly, let's put all our drawings on again from scratch. Now, normally, if you reverse at a 50%, you expect a 50%. Now, we didn't quite do that here, so I'm going to say that's okay. We probably won't see. And sometimes, you know, markets don't respect all the fibs, but we'll just look at the retrace fibs then in this case and see if the market was looking at them here. And I'm going to say probably, because although this 50% level here got front run, we didn't quite reach it. This 50% level was a perfect bounce. So potentially, especially with this daily 200 moving average, we've gone 50% up, 50%, you know, 50% up here. And I think that this is downtrend continuation rather than another leg higher. But that won't really be confirmed until we break this low and this previous low here. And if that's the case, this makes this most likely a big 3-wave correction. So we've gone 1, 2, 3, 1 big bounce, 2, 3, ending 5 waves. And so we'll go level to level. Underneath this 50, we're probably going down to, we'll go to these lows first at 0.79 and then 0.58. The 786 would be I think, where we end up. And if that 0.76 lines up with, in fact, now I'm going to measure it from here because this looks like 3 waves. There we go. Yeah, that would be where the equal measured moves. So I think underneath this daily 200 moving average, if we were to break this trend line, now we might have a wobble here, third touch of this trend line, but I think 0.79 to 0.83 is the potential support zone for a bounce. But for me, the ideal place to be looking to buy MATIC again is 0.59. And so, yeah, if all of those whales are lining up to sell this one, why not sell this? But the key thing is to be selling bounces if you can. So we might do a bit of a wobble here. And so I would be a little bit careful, especially when we look how far we are from this daily 20 moving average. For me, you see, I would still be bearish unless we got back above this 38.2 level. And I wouldn't rule out a bounce back to it before we go lower. Now, let's look at why people might try and buy it here, because I'm just going to measure this high to this low to here. Just underneath here, where we have our false breakdown level, this equal measured move at 0.965. You may see profit taking on the shorts there, and we could see a bounce. And if we get, as I said this morning, if we bounce from there, I would be looking for 1.05 to be the resistance, key resistance. Above there, forget it, we're going much higher. So I wouldn't be surprised if we do this, and then that would be 3 waves, and then 1.05 would be where you look to sell it again. So that's how I am looking for MATIC. So for me, let it go a little bit lower, wait for the bounce, and we'll be selling at 1.05, I think, if we can get there. It would be weird if we didn't have, like here, it would be weird if we didn't have a little bit of a fight or an attempt at this 200-day moving average. Okay, I hope that's useful. I'm going to try, I'm going to get my hand in and do lots more lives. So, speak soon. Thanks for putting up